Hurley Investments Market View Commentary for Monday, the 9th of March. I'm going to do a little bit of piggybacking on what Brian was trying to talk about last week. But the short answer, and this too shall pass, when Donald J. Trump announces he's basically done bombing the military infrastructure. And I'll admit it was a little different on his comment saying, yeah, we can keep bombing things, but the key is, did we just take out his son? So, I mean, the main questions, right, are going to come down to nothing more than, did we take out the son and who's in charge now? That's it. Now, we talked a couple days ago about mistakes. And I definitely want to talk about mistakes because some of you were like, Kevin, what are you doing? And I will go ahead and I will say, we'll go on record, that for me, that this war was probably, my opinion only, was probably the most orderly bearish movement I have ever seen. Can anyone tell me what was the pattern for the last 2 weeks in the S&P 500? What was that pattern on the S&P 500 for the last 2.5, probably 3 weeks? Very, very apparent. Very hard pattern to trade. Technical pattern, anyone know? Down 1.5 to 2% overnight. 1% plus downward open, and then we recovered throughout the day. Very difficult to figure out the positions, but here's some big mistakes. Adding puts immediately for a high volatility expense and then taking them off the last hour. Big no-no, huge no-no. Another big mistake. Selling and then buying back at a higher price. And the worst one, I can't believe I heard people doing this. The worst mistake, buying bullish credit spreads 30 days out. But Kevin, that's the 30 days or less. Yeah, until you're upside down 4 or 5 times your credit. I can't believe some of you, as we were talking, hey, you can't add puts and take them off again at the end of the day. How many times did you give away 2, 3, 4, 5% of the value of the stock in those put prices? I mean, the prudent And again, I understand it's so much easier. Prudent option play was selling calls. And it could have been in the money, deep in the money, or at the money. For some of us, we already had them in place. But going over positions it's kind of unique. For Apple, we had short calls and then rolled to the 17th of April at the 285 strike price. And that was rolling down 295 strike price. And we did take off puts for the earnings. Boeing, pretty neat. We had puts for earnings. So we have puts on the 2nd of April, 230, still in play. And we took off the ones that expired the end of May, rolling them down from 240 to 230. Disney, we just sat on Disney. We have the 20th of March. $110 covered calls in play. Had them through earnings, kept them that way. Google, can't spell. Google L, we have the 17th of April, 340 covered calls. JP Morgan, we did put on the 10th of April, 295, and we had a 27 February 320 covered calls, and then we rolled those to the 20th of March 320. And again, we did that to try to take advantage of that volatility, that premium that's baked into the short side of the trades. Boy, it spiked, it almost doubled on some covered call credits that we had in place. A pretty decent way to run positions. Key Corp, we got 20 March 22 strike puts in place. We ran those for earnings. For Meta, on the shares, we have the 20th of March, 685 puts. We also had for Meta on the shares, 750. Dang it. 17th of April, 750 covered calls. On Meta spreads, we had the short side that we might be looking to take off for huge profits. Gotta love it. Micron, same thing. Spreads to take off. Short side soon. NVIDIA. Well, I thought we have NVIDIA. We should have 27 March 190 puts we took off. We also have spreads there. Palantir puts through earnings. and took them off. And I'm pretty sure that's the general positions that we have in play. Really, the hardest part of the last 3 weeks was finding credits to roll to after the war started. And it was difficult, but I'm shocked. I'm absolutely shocked at people that were day trading puts for a loss. Well, Kevin, it was the market was coming back. It was kind of, but it's a pretty easy trend to see. It broke the 50. Keep the damn puts in place. Well, Kevin, you know, we went above for a couple days and the 50-day held. It's a head fake. 2 days a trend does not make. But Kevin, it was like holding a support level. Then why the hell were you putting puts on? It's not easy to make these decisions. But for the couple of you that I'm talking to right now, for how difficult it was, and yes, you were saying, Kevin, market's down. Market's going to be down a couple percentage points. You're right. It was. But once you get that break, your puts are either staying on until you've confirmed a trend to the upside. And today is not a confirmation of a trend to the upside. Today was a news announcement. That's a very, very difficult pattern to watch. I mean, do you kind of come down and then you jerk down? I mean, hold, boom, then the bottom falls out. I'm shocked at some of you that sold. Because we're in a war, selling off right here, how many of you got back in today? How many of you took a taxable event, selling some stock ownership off to try to get back in now? How many of you didn't? Well, let me put it this way. Difficult, right? How many of you added 6,800 SPY puts, took them off, put them back on, and they're now losing money twice? It was very difficult to trade. But one of the best things to do is to do nothing if you're getting jerked around. Yes, last week we did not beat the S&P 500, but it's a week. There are 52 weeks in a year. Are we worried about it? Of course. We don't ever like missing the S&P by over 0.5%. But just a comment. Even when we miss the S&P 500, I think we missed it last week by 0.62. We don't start making up new rules. We don't start a new investing methodology. We don't quit and sell it all off because we would miss the bounce. We reevaluate. Is there anyone that would like to ask any questions about the last 3 weeks? And I know I'm speaking to a couple of you. And again, I'm not trying to be a know-it-all. I'm not trying to say anything that I didn't tell you on the phone. It is significantly easier to say it today. And it would not have been this easy to say this today if we hadn't had the bounce back. But if you're trading in panic and you're getting jerked around and you're losing on puts 2 or 3 or 4 times in a row, the market was too volatile for you to be trading. And the market was too volatile for you to be buying credit spreads when you don't have the fortitude to sit through it the next day when it goes down. And the market was too volatile for you if you started to sell stuff to create cash 2, 3, 4 months later than our top when we were talking about selling and creating cash 2, 3, 4 months ago. The market is too volatile for your risk tolerance to be selling stock and thinking you're going to buy back in at a cheaper price. These are all lessons learned on your part. And again, we missed the market by over 0.5% last week. So I'm not saying that all of a sudden I'm doing significantly better than you, even though I probably did. What I am saying is if the market's jerking you around, your risk tolerance is not where it needs to be to trade in a market where the U.S. is entering a small-term war, and you probably shouldn't have been trading or investing in the last 4 weeks. And I understand it's significantly easier for me to say because of today. We beat the market 2 weeks ago. We beat the market 3 weeks ago. So 2 out of the 3 weeks, in the war, we were tied with it 1 week. We beat it 2 weeks and we missed it by a week. There's my 4-week run. But I'm now not playing catch up, and we did something on the way down to make up some of that downward movement. And did we do a great job making up half of it or more? Not necessarily. Not necessarily. But we did do something good on the way down with the covered calls. And by Friday, we might look like geniuses. But it was definitely hard. And even though it was hard, it definitely was a tester on if your methodology works. And for a couple of you that are with me here today, your methodology of panicking and crapping your drawers and adding puts immediately for high volatility and taking them off the last hour 3 or 4 times in the last 3 or 4 weeks, or trying to sell things and buy back in, or doing bullish credit spreads, or doing S&P 500 puts and getting those jerked on and off for you. This is the learning experience that's going to prove whether you have the methodology in place to trade the way you were, or if you have the mental fortitude. And it's a good time for self-evaluation on what you're doing. I'm grateful for those of you that called into us. I'm sorry some of you did not like what we were saying, but that's the way the cookie crumbles. I hope your self-reflection goes a long way. And the good news is, I think we've done our tax selling. If we make a run in April, to a certain degree, this will be a non-issue. But will it be a non-issue for you just because you understand options, just because you can trade options, doesn't mean that you have what it's going to take to be able to do this for a job or to do this full time. Some of you are down, 2 of you are down 10 to 15% in your portfolios, which means your self-evaluation in what you did was not appropriate for the situation. And again, I know it's easier for me to say because we had some things that bucked the market. We had Palantir and you know, we had the protection in the right spots and we had short calls in the right places. We had earnings that we went through. I get it. We had some things in place already. But that's because that's what collar trading offers. It offers you to have something to make some of the money on the way down. It gives you the opportunity to roll short calls for more credit to make more on the way down. It allows you to be wrong where you can't be wrong if you're selling something because it's directional, and you can't be wrong if you're doing a directional spread, and you can't be wrong if you're adding puts and taking them off. Day trading never works. We do what we do so we can be wrong and still be right when it comes down to it. All right, couple comments. Let me go through these really quickly. So should we have been collar trading? It would have made it easy to make money on the way down on the puts. It would have made it easier to roll the short calls for more credit out in time or out in time and down strike price. So that's what we were doing. And because of that, it made getting through these last 4 weeks, at least on our side, significantly easier than the losses that I've heard some of you that you've stacked up. You made no secret of the fact that the collar trade is not suited for these particular conditions. Whoa, the collar trade is exactly suited for these particular conditions. Wherever that came from, that the collar trade, okay, so let me restate that. The collar trade is ideal for these situations if it was in place before the event occurred. So that this was ideal. The fact that we had some positions in play because of earnings made us look like geniuses on this coming on the way down. So the alternative strategy to callers that was better suited if you had to get in after the volatility kicked up, prudent option play was selling calls in the money, deep in the money, or at the money. that would have been ideally suited if you were not already in positions. It was easy for, I mean, boy, it was neat to see puts already in place for Google and for JP Morgan and for Key Corp for positions. I mean, boy, volatility kicked up. We had some great days where we made more money on puts than the stock lost. But the ideal play, the play if you were not in the position already, the prudent play, so to speak, was selling calls at the money, in the money, or even deep in the money. We talked about that a couple weeks ago. So that hopefully that answers that question there. And again, very hard to do. The comment Keith gave me was, well, I don't want to have the stock called away. Well, me neither. But how brilliant was it to put at the money calls on Apple at 285? How brilliant was it for Boeing to go ahead and sell a 220 short call, you know, $7 in the money plus $6 of credit? How brilliant was it to have a 340 covered call and roll it out for just as much credit, only going out 30 days instead of having it out 60 days? When that volatility kicks up, you have to use those credits on that short side. And to the best of my knowledge, we didn't get called out of anything. But brilliant putting a Boeing covered call, $7 in the money at 220 to make up the downward movement on a day. Brilliant to take 80% of our credit and get our original $16.90 of credit, rolling out a covered call 30 days instead of 60 because the credit doubled. So hopefully that's answering those questions. And yes, we have, it's kind of funny. The market has definitely been sideways since December. If you take a look at the Dow, obviously we are not bullish, we are bearish. Come on. So we are bearish, but this is kind of fun. SPX is sideways, if not bearish, for obviously the last 3 months. And the NASDAQ is definitely down. But let's take a look a little bit at what we're trading, because we're trading some things. Beauty of being a stock picker, right? A stock jockey. Apple, what a great run down through December, and then what a great run through earnings on down. Pretty neat to make up a good chunk of money December through the middle of January with some 285 long puts. Boeing, what a run Boeing had. Awesome deal, protect Boeing up at 240 for earnings. I want to go through, some of these are really fun. Disney, sideways to down. Great run with puts and covered calls on earnings on Disney. JEPI, We look pretty good on JEPI through this run. Key Corp, nothing like getting in at 17, getting to protected at 22. We look pretty good on Key Corp. Lockheed Martin, look wonderful. Did I do Boeing? I did do Boeing. Meta, thank goodness we have bull calls in place. Leap bull calls. Have some downside on those shorts that we can take a profit on. Micron, great stock to be in. Looks amazing. Nvidia, definitely sideways. Covered calls have been a success on Nvidia. Palantir, huge downward movement. Great job protecting up at 190. Great job using covered calls to lower our cost basis. Again, not easy. Not easy being in this market. But some stocks have done significantly better than others in this market. Okay, interesting conversation here that AI could still be in place. Memory and chips are still where we can see some growth in our market this year. Definitely there's a broadening of the stock market. In fact, I should also put it in there Walmart. Let me go one more that's one of our stocks that we haven't done. Walmart, not a bad run since December. Some great stocks to be in a sideways market that can beat that market. All right. Great questions, by the way. Keep them coming in. Not much happening this earnings week. It's probably the first week of our retail with Kohlers and Oracle, Bumble, Dick's, Adobe, Ulta, Buckle on Friday. CPI could move our markets on Wednesday. Little bit hotter. Maybe we'll see a rate cut. It'll be interesting to see because I believe the FOMC rate cut meeting is next week on the 18th. Do I think we'll have a rate cut? Not a chance. Not a chance. We won't have a rate cut until June when we get a new FOMC chair that you would like to think would be data dependent, right? How are we looking to trade? Still holding on to cash that we raised from last year. Have some great shorts to take off for a profit. We're just not convinced that one day and one announcement means that our war's over. I have a very interesting article. Why fixed income no longer means what retirees think it does. And Nathan, you might be a little bit different than this. Nathan actually has some fixed income from overseas that's really interesting. But in real terms on what you could be earning, your real return with some inflation could be zero. And I've highlighted a couple things about funding portfolios with 60/40s, traditional bonds, bond funds. I just found this article very, very interesting with the inflation that we've had and with the zero interest on bonds that we've had for, really, I'm going to say since 2009 on. we fought about 15 years where bond funds, for the most part here in the US, were not giving you the yield that people needed for retirement, that people were needing for income. And a very interesting article with some great numbers in it for you guys to look at. Also, I found a reason on why many people are not buying into NVIDIA's remarkable earnings. And really what it comes back down to is that obviously their run is unsustainable when they now have back orders that are worth more than their revenue that they were making. But for Michael Burry to compare it to the Big Short and the dot-com bubble, with all due respect, he's an idiot. And again, he's lost over 70% of all these remarkable games that he made with one good guess. But this is a great article where the numbers don't add up. Still doesn't mean NVIDIA can't trade at $300 or $400, but to think it's going to go to $1,000, that just, again, unrealistic, unsustainable. A very good article here, though, that works through the numbers. And then last but not least, will the Iran war fallout end the bull market? Why investors really need to worry? It's a very interesting article. And for all of you that told me, for lack of a better term, for all of you that told me, you see, oil is a good investment. With all due respect, I 100% disagree. It has not been a good investment. Our president wants to flood the market with oil to make it cheap. We learned that through the last earnings. It was a war that has increased oil to above $100 a barrel. Pretty sure it's back down to 90. Don't be surprised when it's back down around 75. Oil, whether it's exploration, refining, oil has not been a good investment with where the administration wants oil and the price of gas to be. So again, for those of you that are oil lovers, with all due respect, it's a bad investment. You did get lucky with a war. Unless you don't sell, then you didn't get lucky and you were done not to take your profits. So just the cold hard facts. I'm sorry if I'm coming across like a jerk today, but those are the cold hard facts of investing in oil right now. All right, any questions that I didn't answer for you guys, or any questions that anyone dares to ask today? And Nathan, thank you for your questions. David, Dave, thank you as well for yours. What questions can I answer for you guys for coming up in the next couple weeks? Next moves. Looking for bargains in stock prices, taking covered call credit off the table, and taking the short side of leap bull calls off. Great question. Letting the long side run now. Maybe even dollar cost averaging. I might even put in here, maybe dollar cost averaging the long side of leap bull calls. That one, again, one day does not make a trend. So that one's a little bit harder to commit to right now. All right, questions. Questions going once. Questions going twice. And again, I know there were just a couple of you that I was definitely talking about, but yes, we will be definitely. I can definitely. I was talking to you. What's the biggest thing you would have done differently if you knew 2 months ago exactly how the last 2 months would have gone? I would have put more in the money or deep in the money covered calls into place. You'll notice though on some of them, some of our stocks, Micron, Nvidia, Palantir, Meta, we went Google, we went farther out in time. We played it perfectly. We went out, 2 months, if not 3 months, on those covered call credits, taking big, huge credits in, completely paying for puts and earnings. If you could read the future, you go deep in the money, so you make more on puts and in the money covered calls than you lose on your stock. So farther out in covered calls and even going in the money on covered calls would have been even more prudent than how we ran it. Great question. Any other questions? All right, guys. Hey, have a wonderful week. I don't know if I'm back next Monday. I'm now coaching a high school soccer team. So, could be a little busy. But appreciate you guys for attending. Appreciate for you letting me speak directly to a couple of you. And again, learn from it. Learn from it. Learn where your strengths are. Learn where you feel you can do this on your own. And where you can't, admit it to yourself. A couple of you called in a panic these last 3 weeks. And great learning opportunities. Guys, appreciate you having here. Look forward to seeing you either next Monday or the Monday after, depending on a girls' soccer game. Again, any questions, just give me an email at khurley@hurleyinvestments.com. And Jackie, I'm sure I'll give you a quick call here. Thank you, everyone. Have a good evening. Good night.